Good morning. This is the dollar index weekly chart. Now, obviously, because of the way the euros are going and not so much the rest of the currencies, but if you're trading the euro, you really need to keep your eye on this little, the little index. You can see where it has really topped and tried to break through that 50% level, coming in just under the 96. When we did break above there and we went up to here, which was 96.86, you can see the week we closed lower, and since then we have been captured by the 200-week moving average, and obviously this 50% level here. We're taking it from October 17 right the way through, so near enough 2 years. Now the dollar index obviously is off the floor, which is why we've seen a good retracement in the euro dollar from 125. But you know, if you look at that particular chart, you can see a little topping pattern. Now these topping patterns that you see, especially a head and shoulder pattern, if you can see them within a trending market, you see that, you know, unless we do take out that 97 area around here, I don't think that the dollar index is going to get much stronger. Yes, it's going to oscillate between 96 and 94 and a half, 94, and that's just the range trading of what we've come to expect when these markets settle down a little bit after making a big move. You can see that in 2017 the dollar index just went one way. We had very little correction, but basically this year we have seen this sideways. Apart from here, we've seen this sideways movement, and it has stayed quite within a narrow range for the dollar index. So this continuation pattern within the downtrend is likely to continue. As I've said, unless we break above 97, we're really going to stay stuck within this range. Now, if we have a look at the daily, we can see, you know, we can have a look and see if we can finesse it that little bit further. So on the daily chart, let's just take this year of what we've done. You can see where we double bottomed down in this 88.15 area, and then soon as we broke above 91, we started to trade higher. Now all technical people are going to be calling, oh my god, you know, head and shoulders, which means really that the dollar index should trade lower, which in actual fact would tie in very well with the euro dollar trading quite a bit higher. That's what we can see at the moment. Now, to break the dollar index lower, you've really got to take out this line here. This is too far away for day traders, so we're looking at this here. Now, if you look at the 55-day moving average, that's coming in at 95.03. If you look at the shorter term 9-day average, that's coming in at 95.12. If you look at the 21-day average, that is coming in at 94.93. Now, the Fibonacci level, for some reason I can't get on this chart, but that is actually coming in at 95.10. So all of this plus the trend line that's coming in at 94.68 really at this point. So all of this area here is going to act as support. And I think the only way that the dollar index is going to fall is that if we break through this 94.70, we've got this little low here coming in at 94.47, but even in this bigger topping position, you can see that the dollar index has topped, and that we've got a double top on there at 95.84. You can see that there. You've got that on the 9th of October, and you've got this on the 19th. So that was Friday, we saw a double top. Now, obviously, although they go in tandem with each other, you've got to give it a little bit of room. Now, our weekly pivot is coming in at 95.24, and our daily pivot is coming in at 95.51. At the moment, we're at 95.45, so really we want to take out that weekly pivot, and that would give us a little bit more room on the downside. I think we have topped on the dollar index. I really do. I think the pattern that we're seeing unfold purely on the yearly chart, but looking at it on the weekly, you can see that it is a continuation pattern within a larger downtrend. There is nothing at the moment that has changed my view about the dollar index trading lower. I was quite happy with it trading higher from here because it based. You could see it based. You could see all the indicators had based. So therefore, there is no reason why it shouldn't have moved up here. I think it was a good thing. I think the euros needed to break out of their range. If you look at these daily indicators, you can see already that ROC is below or on the zero line. We're turning down on the RSI, and we're turning down on this as well. But more importantly, we're diverging. We're diverging on all of the indicators, and that is not a bullish sign. So be very careful when you are trading these currencies to keep your eye on this market, because it really is an important part of the trading if you're doing euro-dollar, cable, but mostly euro-dollar this is going to affect, okay? But it will affect all the other dollar currencies that we trade if this thing starts to move lower, and by quite a bit. You've got the support levels, you've got the trend line, you've got the pivot points for the day and the week. So trade accordingly, and remember the market is overbought and it needs to correct. Catch you later.